The latest OECD report shows us why the net zero policies are going to be extremely negative for citizens. And starting from the reality of what is happening right now to workers and to citizens all over the world, what it does is show us as well how things are going to get not worse, but much worse. Let's look at some graphs that take us to that report. Let's start from what is happening right now. Monetary destruction. Think about this. You have population growth challenges, the problem of aging in developed economies. All of those elements generate a significant impact in terms of economic growth and in terms of the challenges for productivity, for consumption, etc. At the same time, with higher levels of expenditure from governments and higher entitlement spending added to an increased level of public debt, the only option that governments resort to is destruction of the purchasing power of the currency. Ultimately, when governments tell you that they're giving you these enormous rights and phenomenal entitlement programs, etc., what they're really telling you is that they're going to dilute the purchasing power of the currency in the future. So, there is no other option when you look at the fiscal problems of the United States in particular, but also of the euro area, etc. There is no other option for governments than to continue to destroy the purchasing power of the currency and to continue to dilute wealth via monetary destruction. Now, let's look at this graph courtesy of Bloomberg, which shows us how to protect ourselves. Gold. Gold has certainly been a tremendous level of support for investors. Obviously cryptocurrencies, but that has been extremely volatile and much more complicated for a lot of investors. But we have to take into account how Bitcoin has also risen significantly, and the S&P 500. All of them, Bitcoin, gold, and the S&P 500 are actually discounting monetary destruction. And they're actually discounting monetary destruction in a very interesting way, which is, on the one hand, the dollar is strengthening relative to the other fiat currencies. They are increasing their imbalances as well, and therefore, because the monetary phenomenon in fiat currencies means that it's a game of who loses instead of who wins, the dollar strengthens relative to other fiat currencies. However, the dollar also loses purchasing power. So, the way in which governments are going to continue to disguise their enormous fiscal imbalances in an aging population, declining productivity growth, and declining economic growth is via the constant erosion of the purchasing power of the currency. The S&P 500, gold show it. But what they also show is that it's not the same in other economies, because the weakening of the currencies, the euro and world currencies relative to the dollar, happen precisely because the imbalances built in those economies are larger and dollar denominated, which means ultimately that the dollar strengthens in relative terms to fiat currencies, but weakens relative to gold and weakens relative to Bitcoin, and certainly weakens relative to itself via inflation. Governments will disguise their fiscal imbalances with higher persistent inflation, or certainly with a constant erosion of the purchasing power of the currency, which is what inflation is. Let's go to the next graph, which is also quite interesting, because what we can see in the next graph is why the economy is showing much weaker growth in retail sales. This courtesy of Bloomberg Economics shows that the forecast of retail sales is way below the trends of 1998 to 2023. We're again talking about the same thing. destruction of the purchasing power of the currency, weakening of the middle class, erosion of the middle class. We are basically destroying that middle class. Funnily enough, social policies end up weakening the middle class by destroying the purchasing power of the currency. Let's go to the next graph, which also shows us an interesting one. Think about this: the largest fiscal stimulus in years and a massive monetary stimulus lead to a massive decline, courtesy of Bloomberg and the University of Michigan, of the consumer confidence level. Normal, absolutely. Citizens are feeling the pinch of inflation, they're worse off, and they cannot make ends meet. Let's go to the next graph and see what is happening in terms of inflation. Everybody is talking about rate cuts. The Fed should cut rates in September. However, there is nothing in the latest CPI report that suggests that they should do it. Number one, services inflation, 5.1%. Number two, shelter inflation, 5.2%. Transportation services, 9.4% inflation. Medical care services, 3.3% inflation. Overall inflation, 3%. And this with a decline in the energy component. Very interesting. Why? Because a lot of American citizens are not seeing that alleged improvement in their energy bills. However, it does not even matter. Is that none of these figures suggest that the Fed should cut rates, considering that inflation is persistent, because right now it should be not at 3%, not at 2%. It should actually be below 2%, considering the reality of the economy. Let's go to the next graph, which also shows us, courtesy of Bloomberg, what is happening in China. In China, growth in the second quarter, 4.7%, slightly below estimates. But is it a bad figure? It's not necessarily a bad figure, considering that they are witnessing the slump in the real estate sector. So with the slump in the real estate sector and trying to maintain a prudent fiscal policy, the reality is that a 4.7%, a 5% in the first half, is not a bad figure. Let's go to the next graph. And here is where we're going to be talking about the OECD report that shows us that the net zero challenge is going to make people poorer. To start with, this shows that unemployment has been improving, and it has been improving relatively in a positive way. But what the OECD report says is that about 20% of the labor workforce globally is in sectors that are in the energy transition or in the green side. Okay, so those jobs are likely to expand. However, the other 80% are going to suffer because of net zero policies. Number one, the poorest are going to be suffering from higher costs of energy and food due to carbon taxes and other taxes implemented by governments in order to reduce CO2 emissions. So that is going to make people poorer, and that is already making people poorer in 80% of the population. More importantly, out of all of the jobs that will be created, a lot of the low-skilled jobs are going to lose purchasing power of salaries as well, because 24% of the workforce in the 8% industries that are more in CO2 intensive are likely to lose their jobs for less pay. That is an important factor. The impoverishment is repeated a number of times by the OECD. Obviously, the OECD says that policymakers will need to implement transfer policies in order to reduce the burden for the poorest. But guess what? It never happens. Furthermore, when it happens in a heavily depreciated currency. Let's go to the next graph, which also shows us more about this report. Number one, unemployment rates are at historically low levels. However, it is very important to understand that in many of the countries, this unemployment rate comes after a very severe change in the calculation. Let's go to the next graph, because this tells us quite a bit. Number two, the labor force participation in many of these economies is down, is reduced. Therefore, there is no such improvement in employment. It's a basically redistribution of existing employment. Let's go to the next graph, which also shows us what is happening with real wages. In this graph, what we can see is that real wages are not improving. Actually, they are weakening in most economies, and it's very evident, for example, in the United States. Let's go to the next graph, which shows us in a much more interesting way what has happened in the last year. Real wages not improving, actually going down. Furthermore, unemployment rate relatively stable, but with weakening of the labor force participation rate and certainly real wage growth in negative territory. Those are not good omens for a net zero future that looks very, very challenging. And let's go to the next graph. Even the OECD understands that the net zero policies that governments are implementing are going to mean higher impoverishment and worsening of conditions for most workers, and that those workers are likely to suffer even with high transfers, because that will mean a tremendous amount of monetary destruction. Keep defending freedom.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.